Literacy, and it is July 1st, Sunday, July 1st, just a minute after 7 p.m. Central. And this week we're going to have a brief conversation on conducting a capital acquisition plan. We're going to talk about why it's relevant and how to do it, and by doing it effectively can make a big difference in how effective you are in connecting the solutions that we collectively have for small businesses to the problems that they have. So let's go ahead and get started with conducting a capital acquisition plan. So you might ask, well, what is a capital acquisition plan? And a capital acquisition plan serves as a roadmap guiding an entrepreneur from where they are now to where they want to be in regards to access to capital and funding. Most likely you've had conversations with us or participated in other training modules, so you understand, or maybe even attended our face-to-face training. So you understand that we believe that the problem exists in that there's so many lenders and there's so many small businesses, but somehow they don't seem to come together. And there's really two primary reasons for that. Number one is that most small businesses don't know which type of capital is right for their circumstance. And then secondly, in many cases, they don't meet the underwriting criteria for the types of capital that they pursue. So what we do through the capital acquisition plan is start to provide some structure of what type of capital is right for their situation, and we'll go through that here in a minute. And then, of course, if they don't meet the underwriting criteria initially, we work with them to resolve that. And that's a big deal. And I can tell you that banks and chambers and other strategic partners, key referral sources, love this. Love this because it's what's needed. Now, we're not going to speak negatively of alternative financing, but that's not what we do. Certainly, you can Google and find all kinds of resources for merchant cash advances and invoice factoring and so forth. That's not what we're about. We're actually helping them access funding from their local banks and local credit unions based upon meeting the underwriting criteria. So a capital acquisition plan is a roadmap guiding an entrepreneur from where they are now. Doesn't matter where they are now. They could be pre-launch or startup. They could have a mature business, but wherever they are now to where they want to be in regards to access to capital and funding. Now, as a small business advisor and or as a CBI leader, it's important that you at least know this at a high level. You don't need to know the details of how we go through and layer the structures of funding, but what you do need to know is which program are you going to enroll a client in. So we really have two offerings through Business Credit Literacy. We have what's affectionately called the $99 Business Credit Building Program. Hopefully you know a fair amount about that. It's actually the $2,500 Business Credit Building Program, but we have a grant subsidy of $2,401 that limits the out-of-pocket cost to $99 for the client. So the Business Credit Building Program for a long time has really been our flagship program because it works for all types of businesses. We can guarantee success. It's just a process that we need to follow. So is that the right program for a client's needs, or is it the more involving small business certification and funding program? Often you'll see that referenced as the acronym SBCFP. And so that's sometimes referred to as the $250 program. So in that, we're taking them through 5 education modules. Upon completing that, they get certification. We went through that program in detail last Sunday and recorded it. It was a teleconference only and shared it. So if you don't have that recording, let us know and we can get it to you. The point here on the second bullet of this slide is this: as you're out visiting with small businesses, hopefully conducting workshops like we'll train you and support you in doing, that you're going to run into the fact that most small businesses have a problem, and that's access to capital. And we have 2 solutions for that: the $99 program or the small business certification. What we want to do is help them select the right program based upon their circumstances, and you need to be able to describe why. why that is the right choice for them at this time. And that's the purpose of this training this evening, is to give you enough information, show you the front end of the capital acquisition plan, and be able to make an educated and explainable recommendation to the client of their next step. All right, let's proceed. Ultimately, it is super simple. If the client needs cash funding, then we know that they're going to need the Small Business Certification and Funding Program. But I want to spend a minute or two describing that, because if you assimilate this, if you understand it, you'll be very effective in describing. So the Business Credit Building Program is awesome, right? It works 100% of the time. It can get them access to capital, reasonably $100,000 or more, but it's not cash funding. Why? Because just understand that if we were to go apply for cash funding, the lender is going to look for other elements to have in their underwriting mix than just credit worthiness. You might have a great personal credit score, or in this conversation, a great business credit score. Is that enough to go get a $250,000 loan or a $250,000 line of credit, for example? No, because the lender is going to be worried about other things as well, such as, can you pay it back? So sure, you paid your bills in the past. That's a great start, but can you pay it back? So we're going to look at the 3-tranche model here in a second as a frame of reference, but I really recommend printing that out and carrying that with you. I know that I do. It's my main talking point when we're sitting down with banks for referrals, when we're sitting down with chambers or incubators. And if you come to our July or any of our upcoming training, we're going to start to do some role play of how to very easily develop those relationships. But the point is, the 3-tranche model, even if you're working with an individual client, whether it be post-workshop or just a standalone conversation, you need that as a reference piece. So if they want cash funding, such as bank loans, lines of credit, or what have you, then we need to get them into the Small Business Certification and Funding Program, because that prepares them for the broader set of requirements that's going to be necessary to get cash funding. Alternatively, if all they're looking for is business credit, which is a great resource, then they can enroll in the $99 Business Credit Building Program. So that's different. So a lot of you, I think, or what I've heard frequently is people will say, oh, if it's a startup, then they need the 250 program. And if they're not a startup, then they don't. And that's not the case, because whether you're new in business or have a mature business, the lender's still going to look at things such as the business plan and your financials and your cash flow forecast. So those things are going to be necessary if you're a new business or not. Whether you're a novice in business or you're an experienced entrepreneur, these are pieces that are going to be needed to get cash funding. Now, I understand you might have someone that says, well, I know what I'm doing. I don't want to enroll in this $250 program. I don't want to go through the educational curriculum. I just want access to cash funding. Well, for us to keep it efficient and economical, we're going to run everyone through the Small Business Certification Funding Program that needs cash funding, because it's more efficient, right? Because we need to make sure that they know what's included in a good business plan and cash flow forecast and so forth. And most people aren't there. Now, there's a lot of folks that are knowledgeable and sophisticated, but they probably don't have all the pieces in place. And quite frankly, if they had all the pieces in place, they wouldn't be talking to you and I, right? They would already be down at the bank signing the paperwork to get their loan or line of credit. So we're not suggesting that they don't have a business plan at all or aren't familiar with financials, but if they want our help in getting cash funding, then we're going to take them through the Small Business Certification and Funding Program. One of the reasons that that's real simple to explain is there's no cost. The $99 program is, guess what? $99. We talked about it's $2,500 program, offset to $2,401 with grant subsidy. The Small Business Certification Funding Program is a $250 refundable deposit. So there's really not even a cost for that program. So there's more to this, and I'll dig deeper here over the next few minutes. But the bottom line is, if you can assimilate this, if the client is looking for cash funding, we need to get them in the Small Business Certification and Funding Program. Now, I'll tell you this, you can keep it real simple. If you want to just enroll them in the $99 program, and then we'll onboard them, we'll do some fact finding. If we find that they're better off to be in the Small Business Certification Funding Program, the 250 program, we'll bump them up to the 250. We'll give them credit for the 99 they've already spent, so they won't be upset with you or frustrated or feel like something's wrong. We'll just better understand what their needs are. They'll pay that incremental 150, and then we're going to run them through that curriculum. So you have that option. But the purpose tonight of explaining the capital acquisition plan is so you can understand a little bit more and maybe do that filtering up front. And I shouldn't say filtering, it's just a decision tree. It's one of two programs they need to be in. All right, so let's move on to the next slide. So this is the 3-tranche model description. Hopefully you've seen it before. And again, it's really crucial to have familiarity with it and probably carry it with you. And of course, we can edit the content over here with your information. So tranche 1 is the seed capital. Now, seed capital does count, as cash capital. So if they're looking for tranche 1 funding, they need to end up enrolling in the Small Business Certification and Funding Program. If they're wanting, if they're wanting the bigger source of funding, tranche 3, they're going to need to enroll in the Small Business Certification and Funding Program. Alternatively, if all they're looking for is business credit, then they can pop right in here. And if they enroll in the Small Business Certification and Funding Program, we better understand their needs, and then they end up also participating in tranche 2, we will not charge them an additional $99. That's built into the 250. So essentially, we include the business credit tranche in all of our capital acquisition plans, because it's a smart thing to do. And the purpose tonight isn't to defend that, but you just need to understand, if it looks like that they're going to need cash capital, whether it be from tranche 1 or tranche 3, those lenders care about more than just credit worthiness. They care about how you're going to use the money and your business plan and so forth. So you can see, probably in most cases, most small businesses are going to need the 250 program because they need those other elements. Now, we can make it real quick. Let's say that you bring us someone that's very sophisticated, and at a client like this week, this gentleman is getting ready to buy a dry cleaner, an existing dry cleaning business. And he came to me, sat down in my office, had a good business plan, had an amortization schedule, had everything in place, which is very rare, but still we would want to run them through the Small Business Certification Funding Program because it's the most efficient way for us to educate them across the relevance of these areas. Otherwise, from your perspective in the field, you might say, well, why bother? But for those of us on the inside that's implementing, if we had to have individual conversations across all they need to know about a business plan and cash flow forecasting and financial reporting, it would take us hours of conversation. That's not efficient. Running them through the curriculum is. All right, so let's move on. Now, here is the URL for the capital acquisition plan form. And we're going to go through it. I did some print screens in this PowerPoint, so we don't have to go online and suffer any delays. But I'll show you the CAP application. But this is the link. So you would want to have access to this link because you're going to walk clients through these questions. You don't want to just send them the link. Whether you're on the phone with them or in person with them, you want to walk them through these questions. And the reason is for two reasons. Number one, we know that they get it done because you're there guiding them. But secondly, you're creating value. You're developing a relationship with them, and it easily allows you then to dovetail in other questions that you have for them that could pre-qualify them for other services that you offer, other problems that you can solve. And I'll show you how that works in a second. Okay, so if you were to click on that link from the prior screen, it would take you to what looks like this. Now, this is a print screen, so it's just inside the yellow box here is what they're going to see. The nice thing about this is each time they click on a blank, it's going to give them a little information box over to the right that further explains what we're looking for. Name is pretty obvious. You're going to see the little asterisk here, which means it's required. If they don't fill that out, it's not going to let them progress. There's multiple pages of this, and common practice is to get basic demographics first, like these 6 questions, and then they come down and click next step. So again, ideally, you're typing it in for them either over the phone, and you have them on the phone, or face-to-face, maybe you have your iPad or what have you pulled out. Worst case scenario, you've given them the link and you're still talking to them through this, but they're going to put in their name, their personal name, business name, phone number, city and state, email address, and then of course this is you. Pretty obvious on that page. Now again, if they leave any of these blank, they won't be able to progress. Sometimes what we'll see is people will start and then they'll just exit out. They won't hit this next step down here at the bottom, and then all we get is that information, which isn't enough to proceed. All right, so then once they hit next step, then it comes up with this page. And so now we're collecting more relevant data. So let's talk through the questions. It asks first, what is the current status of your business at this point in time? Are you pre-launch? Are you launched but not cash flowing yet? Are you launched and currently cash flowing? So that helps us understand a little bit of their circumstance. We need to understand, secondly, how much cash do they need in the short term? And I'm pretty sure when they click on this, a little box will come up on this side, and I think it defines short term as the next 30 days. Number 3, what's the amount of capital needed long term, defined as over the next 36 months, to reach your potential? Now, that's a much more difficult question, right? Because we don't all have a crystal ball. We don't know exactly how well things are going to go or how big we're going to expand. And of course, where we get to in 36 months isn't necessarily where we'll reach ultimately. But we are going to work with them to, if they're doing the Small Business Certification Funding Program, we're going to put together a 36-month cash flow forecast. So that ties to the 36-month term we're asking here. And so it doesn't have to be an accurate answer, but it needs to be their best guess. As you know, and as I know, the more planning that they've done, the more refined that these numbers are for number 2 and number 3, because they've thought about it, they've written it down, they've projected income and expense, they've seen what the shortfall is, what type of equipment or assets they need, working capital. But anyway, whatever they think it is, they can put it in. It doesn't have to be refined. You never want them to say, oh, let me go work on this. I'll think about it some more and come back. No, let's finish it right now where you're at. We can fine tune it as we go along. We can ask questions about what type of capital and funding do you want? Are you willing to use personal credit? And hey, I know, we're business credit literacy, right? We focus on business credit that's based on the EIN with no personal guarantees. However, if they want tranche 1 seed capital, it looks at personal credit. There's no personal credit score minimum, but it looks at personal credit profile. So they can't say, oh, I just want to use my business credit and get seed capital. Those are 2 inconsistencies. And then also, if we're going to get into tranche 3, we can certainly aspire to use business credit in lieu of, we can use business credit in lieu of personal credit as an underwriting exception, but we just ultimately need to know if they're willing to use personal credit. And a checkbox means that they can choose more than one. A circle means it's just one of the above. Are they looking to build business credit? Secondly, are they looking for investor capital? Investor capital, we used to have a 4-tranche model, not a 3-tranche model. And the tranche that fell off was investor capital. We still have some access to resources for that, but I'll tell you that chasing after investors is the most volatile, because they don't necessarily follow underwriting criteria. They go by feel, and it's their personal money, and they may perform, they may not, they may fund now, they may fund later. So investor income is reasonable, but we don't really build our plans around that because it's so unpredictable. But we would like to know if that's an option, and we do have some access to investors. SBA loans, if that's preferable, and then other. So just trying to get an overall feel of what they're looking for, and they may not know. And then fifth, their urgency. I need funding now, or my business will close, or I can't start, conversely, or I'd like to have funding, but it's not necessary for survival. Trying to get a feel for urgency. At no point are you trying to look for certain filters to say, oh, I'm sorry, we shouldn't help you. This is just data that helps us better understand ultimately what their plan should look like, and it's also giving you valuable information to figure out, should I start them in the 99 or in the 250 program. So then they're going to click next step, and that's going to take to the next page of questions. If they exit at this point, we'll be able to collect this data, but we won't have all that we need. But again, if you're walking them through this, either on the phone or in person, we know that you're diligent enough to click next step. Now, the next step has a few more questions, so it's broken into 2 slides. So the top half of this slide asks essentially for their elevator speech. Explain your business in 1 sentence, and they need to be able to do that. That's important from a lender's perspective, from an investor's perspective, and for us to be able to succinctly understand who they are. Secondly, on this page, we want to understand what their form of business is. Are they operating as a sole proprietorship, partnership, LLC, C Corp, S Corp, or nonprofit? We can help them all. It's not, oh, I'm sorry, that won't work. It's just, where are you right now? We want to find out approximately when they started. Now, for us to help clients, there's no minimum time in business. They don't have to be of a certain age, but some funding sources look and act different based upon their age. So we want to ask that. And if they haven't even started yet, and again, we work with so many pre-launch businesses. The last workshop that I did was last Tuesday. We had a little over 50 register. We had between 30 and 40 show up, and a good number of them were pre-launch. So that's fine. There's more pre-launch businesses out there than there are existing. A lot of people have a dream and a vision. They haven't had the knowledge or capital to start. So again, no restrictions, nothing kicking them out, but we want to know the answer to that question. Are they currently generating financial reports? Of course, if they're pre-launch, the answer would be probably not, because there's not much to report, although they probably already do have some expenses. Just need to find out if that's something that they're currently generating, like income statements and balance sheets. They could be doing it themselves through something like QuickBooks. They could have outsourced it through an accountant or CPA, or it could be no, which is fine. Then we want to get a little bit of a feel for, if they are in business, what's an average monthly gross sale number? So how much money is coming through? So I'm clicking the page, but this is ongoing of that same set of questions. Now we're on number 6. How many business partners do you have? Typically, when we're going after capital, any business partners with 20% or more will have to be included in the deal. We'll need information about partners that own 20% or more. Want to find out what their role is, because sometimes the owner will be busy and send us a subordinate, and so that's fine. We can start the conversation, but we can't go too far if we're not involved with the decision maker. We want to know if they have a business plan, and that's really a bad question, because a lot of us will say, oh yeah, I've got something, whether it's in my head or on paper. It may not be fund ready or loan ready, but just a simple question, do you have a business plan at all? We want to kind of filter them and find out if they've started building their business credit profile, and the easiest way to quantify that is, do you know what your PAYDEX score is? And if they don't know what their PAYDEX score is, that's fine. They can put not applicable or don't know, but that gives us a real quick feedback of if they're competent and progressing already on building their business credit. Personal credit score, as we ask, because it's relevant. Now we're just asking if they know them or not. If they do know them, to provide, because it'll make a difference in accessing some of the tranches of capital, and then what other resources are you using. So that's it. Now it doesn't show on this page, but at the bottom it'll have a submit button, and then they submit it. Now what you may want to do, though, is very seamlessly finish with number 11 on our list and then go to your list. And we'll talk about that in just a second. So last slide here of the training. Then what? So once you've walked them through those 11 questions, you're going to hit submit, as I just said, and then that'll come into us. So what we call our internal advisors can pick that up and work with them from there. You should know enough to go ahead and enroll them in the right program, either the 99 or the 250. So you should go ahead and close them then, and you know enough to not only recommend which program, but defend it and explain why. And then next, we'll work with them to create a more detailed plan, because it's more than just which of the two programs they should be in. We're responsible for a much more detailed capital acquisition plan, not your burden. Now, what I want to do here is spend time on this bottom bullet, because this is where more dollars, put a dollar sign here, more dollars come to you on the second bullet than certainly the commission share we have out of the 99 or the 250. So once you've done the needs analysis from our perspective, you need to blend into yours. And some of you are insurance professionals, and some of you are accountants, and some are business coaches. And so you have different services you offer. Thus, you have different questions and techniques of qualifying someone for your offerings. And so I won't even begin to insult you by suggesting that I know 1/1,000,000th of what you know about qualifying people. But I can tell you what I've seen work really well, especially for insurance and financial professionals, is to dig into their current situation, right? And what they might find, and I remember specifically, I was sitting in Applebee's in Tyler, Texas, with one of our advisors named Brian. And we had just left a small business client appointment that I'd set up, and we were at Applebee's at a table waiting for lunch to come out. And he looked at his phone and he kind of snickered, and I said, "What's going on?" And his deposit had just got posted for a $35,000 commission from a 401k rollover that he did. Now, frankly, that was for both the husband and wife, so it was a couple. But the annuity that he wrote paid him $35,000 from that one client. And so I can't promise you that, but if you're involved with offering annuities, it's not unusual that people that are starting small businesses have left or will leave their W-2 employment, and thus that 401k becomes kind of orphaned and an opportunity for you to work with. Maybe that's not the case. We have another example working with a doctor, and he has a 20-year-old daughter that's in college, and what he wanted to do is to help her build both some asset protection but cash accumulation. So in that case, he bought her a $200 a month, $2,400 annual premium indexed universal life. And again, we're not involved with insurance or annuities. I'm just giving you examples of how you can take this capital acquisition plan questionnaire, dovetail in your needs assessment seamlessly, and help people a lot. Maybe that's not the case. Maybe they just have older parents or grandparents that aren't well set off and could benefit from a final expense plan. Maybe that's not the case. Maybe you represent voluntary benefits, whether it be Aflac or Colonial or Legal Shield or what have you. But the bottom line is you're in a perfect spot to be able to help these individuals because you are their trusted resource at this point. They're looking to you for guidance. It's probably the business credit literacy access to capital that brought that conversation to the table, but now you're able to expand upon that and help them solve other problems. All right, so we are 30 minutes into it. We've covered the content. I'm going to end the recording, and then I'm going to open up the lines again for any questions that you have. You can either verbally ask the questions as soon as I open up the lines, or you can chat the question and I'll respond back. But let me end the recording here. Stand by.